Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the stock that's on my radar today is, in fact, Hindustan Rectifiers, a small company. It's around a 213 crore market capitalization company. Well, if you take a look at it, the stock has corrected nearly around 22-23% from the recent peak. But remember, if you take a look at it from the lows, it's already rallied close to around 70% odd. We're not talking about the share price. We want to explain to you what does the company do effectively. Now, it's more or less a railway thing. If you take a look at what exactly the railways are saying, the government is saying they're targeting production of around 600 locomotives in the coming fiscal. 600 locomotives will require 600 transformers, and that's what this company produces. And also the company, from last year to this year, they moved from development to, in fact, the approved category. How does this change things? It makes them eligible for a higher amount of transformers. What I understand is 600 transformers, per transformer is roughly around 85 to around 90 lakh approximately. If they can get 100 of that as well, it can give them good visibility going ahead. But what are these products? One is transformer, then is auxiliary converters, and finally it's a switchboard. Let's tell you what a transformer is. A transformer distributes current to all different systems of the locomotive at the desired requirements. In terms of the auxiliary converters, they are used basically for cooling of various equipments in the locomotive itself. And finally, the switchboard, that was up for you as well on the screen. But I told you it's a railway play, and 75% of their revenues coming from the railways. Industrials account for only around 25% approximately. But let's move on then to the next piece of news. Then the next chart we have. Well, in their last annual report, the promoter, that's Mr. Nevatia, he had said that have a little patience. You're going to see an ascending trend from here. So I was looking at the numbers very closely. Q4 was very good. In fact, it was the best quarter that we have seen in many, many quarters. Good sales numbers, more than 54 crores. I was taking a look at the last few years. We have never seen a single quarter 54 crores. Margins were more than 10% and profitability as well as around 3 crores. Couple of quarters before that, there was a loss. So for the year itself, it was a bit of a turnaround year, because the margins popped up. FY13 was very good. Then most of the products became obsolete. Now, in fact, a bit of an uptrend is what we're seeing. 8% with revenues of around 130 crores. From a net loss, this time around they delivered a net profit, though they're still a far cry away from what they should do in FY13 itself. What are the key monitorables then going ahead? You know, the few factors that you should be looking at going ahead. One is, can the top line growth continue? Can they do 140, 150 crores, a 12 to around 15 or 16% growth in the coming year? Margins, they did 11.5% in Q4. Can they do double-digit margins? We'll be waiting by for that. And in fact, in terms of an order book, I understand that in fact the order book is nearly around 180 to around 200 crores. So FY19 is fine. What about FY20? That's the question that you're asking out there. But what is the debt in their books? Their total debt, including working capital, is roughly around 50 crores odd. But let's wind down this presentation then and tell you a couple of factors more. Who are their competitors? These are all the competing agencies, both the international as well as the domestic companies that compete with them for a whole host of their products, as well as what exactly are the risk factors, policies of the Indian Railways, the government. That's something that, you know, if you don't get an order, then what do? That's one factor. And second is, they've been making losses, so no dividends in the last few years. And finally, you know, the working capital requirement as well, working capital cycle, it takes nearly around 4 to around 6 months, around 5 months to receive those payments. The working capital cycle as well, a little bit elevated when you're getting margins of only around 8 to around 9 or 10%. And the shareholding as well, 42% is with the promoter. But a couple of the Bajaj family as well, they had some stake in the company, but they're declassified. So they're not classified as promoters. They're just normal shareholders in the company. We'll keep an eye out. They did a rights issue last year itself. And that's an interesting company, more or less a railways play. But can they display good numbers going ahead? What about visibility for FY20?